Welcome back to the AI Daily Brief Headlines Edition, all the AI Daily news you need in around 5 minutes. Once again, we kick off today with a provocative tweet from Elon Musk. On Tuesday night, Elon tweeted, "Should Tesla invest $5 billion into xAI, assuming the valuation is set by several credible outside investors? Board approval and shareholder vote are needed, so this is just to test the waters." With 764,000 people voting at the time of this recording, 68.4% said yes, 31.6% said no. Some of the more popular responses: Robert Scoble writes, "Doing so will put Tesla ahead for decades, so yes." Jeff Bezos of EACC fame writes, "Absolutely aligns interests and will enable massive benefits from combination of multimodal datasets between internet data from X and embodied intelligence data from Tesla Optimus and the Tesla fleet. Will make both products better." Now, what's going on in Tesla that might be driving this? The Wall Street Journal published a piece this morning, "Tesla's auto woes crash Elon Musk's AI dreams. Second quarter results show a challenged car business while the CEO just wants investors to think about autonomy." Tesla, which is down 12% at the time of recording, according to WSJ, quote, "finally has financial results to support the argument that it is more than a car company. They still don't go anywhere near justifying the latest run-up in the stock." And so, of course, the question which will be debated, should Elon push this farther, is what this would actually do for Tesla. Now, of course, you have to think that part of the reason that people have been interested in xAI in the first place is the potential links between it and Elon's other portfolio of companies, most notably Tesla. And so really, I think this is a question not so much of whether the xAI folks and investors would think this is a good idea, but whether retail Tesla investors think it is a good idea or just a distraction. As we discussed yesterday, Meta has officially launched its Llama 3.1 suite, including for the first time its big flagship model, the 405B. More interestingly, however, Meta CEO Mark Zuckerberg has been absolutely stumping for open source. As part of the announcement, he published a blog post, "Open source AI is the path forward." He writes, "In the early days of high-performance computing, the major tech companies of the day each invested heavily in developing their own closed-source version of Unix." He basically argues that he believes that AI is going to develop similarly to how Linux gained popularity, and that this is better for developers, for companies, and for the world. Over in market land, Google parent company Alphabet reported its results this week and was up 14% year over year on the last quarter. And surprisingly, AI featured bigly in Google CEO Sundar Pichai's comments about the company. Google's cloud division hit $10 billion for the first time while also achieving $1 billion in operating profit, and Pichai said that generative AI for cloud customers already generated billions in revenues and are being used by more than 2 million developers. The Times framed this as Alphabet reports 29% jump in profit as AI efforts begin to pay off. They focused on that same quote from Sundar, and frankly, what's interesting to me is just the Rorschach test of how different news outlets are interpreting this. For some, like the Times, it's the story of AI efforts beginning to pay off. Others are saying things in headlines like it's just not enough. For a little while then, I think we're just going to see AI performance results as it relates to market valuations as something that is in the eye of the beholder, or in this case, the individual investor. Lastly today, earlier this week, we used the context of Harvey, the legal AI startup, to discuss whether it was too late to start an AI startup in general, or a verticalized LLM in specific. Well, now, a couple days later, Harvey has announced that it's raised a $100 million Series C at a $1.5 billion valuation. TechCrunch writes, "The bulk of the new capital will be put towards collecting and curating data to build and train domain-specific AI models, while growing Harvey's headcount and expanding its paid services to new geographies." Now, of course, once again, it's all questions of interpretation. You might remember that the information had reported back in early June that Harvey had planned previously to raise $600 million at, quote, at least a $2 billion valuation, in part to acquire legal research service company VLEX, but those plans had fallen through. Now, from where I'm sitting, $100 million is nothing to sneeze at, but the slightly reduced ambition could also show that even with some big backing, this is still a very difficult road. I personally am glad that companies like Harvey are getting the capital they need to go out and try and figure out how to develop AI that can handle more advanced use cases in more complete terms. And so to them, I say congrats and good luck. For now, though, that is going to do it for today's AI Daily Brief Headlines Edition. Next up, the main episode.